The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks. How you doing today? Darrell Martin here on the Diagnostic Trading Hour here at TFNN.com. Don't forget you can check us out at TFNN.mobi in your mobile phone. Listen to us anywhere, 9 hours of live trader commentary a day, and I heard that is expanding. In addition to that, of course, watch our screens as we talk about the markets live at TFNN.com on Tiger TV, and check out the archives, Channel 7, for the Diagnostic Trading Hour. All right, well, markets are pretty quiet this evening, this afternoon, I guess. This has been a long day, so afternoon. We got the S&P is currently up 2 ticks. We have the Russell is down a couple points. We got the NASDAQ up 6, and the Dow's up a mere 9 points on the day after those big moves that we got yesterday. We'll get on over at copper. Copper right now up 0.0605. We got gold up a mere 4 points. And we got silver moving a bit up 0.183. Going on down to our energies, we got natural gas down 0.091, and we got oil down 82 cents. So nice move right there in oil on oil inventory day. And oil inventory coming in a little lower than an expectation. There was expected to be a decline. They came in a little bit lower than that. Yet you see oil going down, right? So the fundamentals don't always line up with the market, and that's why you want to trade the charts. Just be aware of the fundamentals. We'll get on over at corn. Corn down 5 points. We got soybeans down 7. Euro dollar currently down 31 pips. Aussie dollar down 55. Pound dollar up 4. Dollar franc up 22. Dollar CAD up 30. Dollar yen's up 26. We got the Aussie yen is down 36. Euro yen is unchanged, flat on the day. We got pound yen up 45. And the euro pound is down 20 pips on the day. All right, well, here is the news that we had come up today. And so we'll do a quick review of that. We'll talk about the news coming up tomorrow. Tomorrow's going to be a little bit interesting. You're going to have the markets, a lot of the markets closing earlier. And you got some big news in the morning, and then it's all done. I mean, I was just on the phone with my broker. And, like, when I got off the phone with him, he went on vacation. He was gone. So everybody's leaving. They're all going on vacation right now, okay? That means lighter liquidity. So you want to be aware of that. The lighter liquidity that happens like before the markets, that can mean nothing happens, or it can mean a massive move out of nowhere. It's a very difficult time to trade. The longer you trade, the more you learn that you actually start to back off. And, I know traders who literally won't trade like 2 days before or after a holiday. I know some traders don't want to trade the entire week of a holiday. One of my mentors, he actually takes off from the week before Thanksgiving to 2 weeks after New Year's. Personally, I don't like to take that much time off. It's just, that's what he's found works for him. He's found he doesn't make as much money during that time, and he'd just rather take off the holidays and not worry about wins or losses and just spend time with family. So, just something to think about. Don't equate today and tomorrow and even Monday to every other day in your trading, okay? It's going to be a little bit more challenging just because all the players aren't in the market. They're heading on out. Anyway, so right here, looking at what we got Yellen was talking today. We got crude oil inventories and a few other reports. And if I pull up today, July 2nd, we got the pound nationwide PMI and all that. So let's just start walking through them all one at a time. And I was trying to see if we had something on gold that might pop up here because it's going to expire here in a few minutes. But so far, no such luck. So let me get another chart going, and I'll leave that gold chart over on the side just in case we do get a spike. And throw the pound dollar on. I'll just pull up 5-minute charts to make it easy. And let's throw on the spike striker. And just to see if anything comes up. Maybe we find a trade as things are going. We did really well yesterday. Got in that trade. We averaged like, an $88 entry. Take profit did not get hit. It kept coming close to it. Did not hit it. Thing went to expiration and expired in the money. And 20 contracts. Let me see if I can find the trade. Let's see here. I take screenshots all the time. So, yeah, here we go. Went in. I shorted 20 contracts on it at $88. So they expired at 0, which is good because you want to buy back lower than you sell. So if it expires at 0, that means you bought back at 0. You sold at 88. And so if we go in and do a review on that one, and I'm just bringing that up right now because that is pound dollar. That's what we're looking at the moment. And let's see. So if you sold at 88, yeah, made $88 times 20 contracts, $1,760. So not too shabby there. Made $1,760 on yesterday's rodeo show. And I was on a risk of $240. So not bad at all. Anyways, and that was on like a 3 or 4 tick move. I mean, we were not talking a big move at all. And no stop loss needed, low risk, good setup. All right, so let's catch up to today. I just wanted to catch up on that one because it expired like right as the show was ending, so we didn't get to actually post the results on the radio. I posted it in the room, and the Tiger's down there. I just didn't get to post it here on the radio. Okay, so last night we had a few things. What all we got here? Okay, let's go into... We'll go back over to Aussie in a second. On the pound nationwide PMI coming out at 2 a.m. And we were looking to enter an iron condor as early as 11 o'clock, no later than 1 a.m. for an expiration at 7 a.m. for a minimum profit of $30. And so let's back up a little bit. There we go. And then let's do some simple measurements. Let's say if you got in at the 11 o'clock time for the 7 a.m., this was the high right there. So that's 27 pips on the high. And we were looking for 30, so we got it within that 30. That's good. Because remember, we're neutral on this trade. We're saying we don't expect it to move more than 30. And then we expired right over here at 7 o'clock at a price of 12. So if you got 30 pips on that, you made 18 pips in profit. And you had a basically 60 pip up, 60 pip down, 1-to-1 max, if you were going to get out of the trade, like the stop trigger, like 1-to-1 max profit to, planned risk ratio. Anyway, so just another one working out very well. I got a question the other day. Somebody asked me, hey, on this whole spike striker idea thing that you do, does this work on news? And the question is yes. Obviously, going in the news, you want to be careful because there could be a big spike. But when the spike happens on the news, then that can be, a good clue to, hop on in and get ready to, take the trade the other direction because it flew up and then it backed off. And so, for example, right here, last night when the news report came out, we got the 5, 10, and the 15. We got all 3 time frames firing off to go short. And so on the 5 one, we got, there's our 5-minute. The next one broke the low. That's a sell right there. Okay, and it expired in the money. If we go 10 minutes in, so it would have ended right here, and then so 1, 2, and then it broke the low. That's another sell. And that was expiring in the money. And then we got 1, 2, 3, and it broke below the low, and that's a sell as well. And that one was also expired in the money. So all 3 of those worked very well. And then we got another spike right here, and then went in. Let's see, we break the high. We right at the high. So you may not have taken that trade because I like to get those breakouts. If you did, it did work. But, be careful on those. Then we got one here. It did not break the high. Actually, didn't even hit the high. But if you took it, again, it did work. It reversed. Market went up and expired in the money. Then you got a short right here. This is nighttime trading. This is early AM trading. Mainly, I guess, early AM, what we're looking at right here. Goes up 5 minutes, goes short, and that's a short right there. Because It broke the low, and that expired in the money, and then we go right on over here, and we got 10 minutes, so 1, 2, did not break the low, did not even hit the low. I guess if you would have traded it, depending upon your strike, that would have been close. Like, that's a maybe in the money trade. But definitely all the ones that broke the low or the high, those definitely all worked, and then there was like 1 or 2 there that were close if you just ran in on them. Then we got another launch this morning when the news came out on the ADP and FP report. And right there at 8:30, and we can see, like, I mean, there's basically this big spike. It goes in, and then it reverses. Did not get an entry there. On the 10-minute one, 1, 2, got an entry. May got an entry. Let's see here. High and high. Matched up on the 15-minute. So 1, 2, 3, and then 1, 2, 3. No entries winding up, but it did stay flat to positive all the way across. So if you hopped in, it worked, but not necessarily the best setup, because, again, I like to see it break those highs or break those lows to give you the best trades. And going on into today, let's see, that one didn't break the low, but, again, would have been in the money. And then going right over here, did not break the low. Again, still would have been in the money. Right here, I think that one did break the low. Yeah, that one broke the low and expired in the money. Then we got one going down and then up. That also, so you would have had basically a butterfly right there. You would have had a sell and a buy in the money. And then right down here, boom, did not break the high, did expire in the money. So, I mean, like I said, some people will take them regardless of whether or not they break the high or low, knowing that they are going to lose, you know, a couple extra ones that they probably wouldn't lose on if they didn't take those. But they also pick up a lot of extra trades profitably that they would miss out on. So you have to make that judgment call. Or maybe do, you know, maybe half the size on those, whatever. But some days I've seen it really pay off that you didn't take them. Other days like this, I mean, it's 4 or 5 extra trades you would have picked up by taking them. So it's really, you know, you got to make that call on whether or not you want to be a little more aggressive and just top in the trade, or whether you're going to wait for it to break the lower high. You'll get a little better pricing, and you'll get a few more entries. Let's see, going on over here. Let's get rid of our drawing objects so we don't have all that stuff on there. All right, that catches us up on the pound dollar. Let's look on over at the Aussie dollar. So Aussie had their trade balance report come out. They also had their, cash interest rate come out. And I had this set to default. There we go. And we'll wrap up the Aussie when we get back. We'll go into the euro and oil as well. And then we'll set you up for tomorrow's report.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And what we're looking at right now is checking out the Aussie dollar. And going through the announcement that came out last night on it. We had the trade balance report and came out at 9:30. So let's see. You can see, obviously, it's not too hard. Don't have to be a genius to see where the news happened. But I am trying to figure out what in the world, like if it came out at 9:30, unless there's an error. Let's see here. Building approvals. Well, we had RBA governor speak at 9. We had building approvals at 9:30. That's weird then. Let me make sure my charts are on the right time zone. Yep, 1:30. And just double checking. Yep. Okay, making sure everything's where it's at time is now 1:25. Okay. Yeah, it's 9:30. So you'd expect that to be the news, but news didn't happen until here at RBA governor speaking here. So there's a massive sell-off right there on the Aussie dollar. Either way, let's see how our trade played out. I mean, there was a surprise, right? So what happened on our trade? Did it work? Did it not? We were looking at actually getting in on the trade at 7 o'clock, as early as 6. And so we'll measure it from, I put 7, but we'll measure 6 and 7, okay? So let's measure it from 6 right here to 11. All right, we had a 29 pip move. We go 7 to 11. Basically the exact same price, so that didn't matter. And yeah, I mean, that's pretty much it. Now, if you would have got in before the announcement, like right before, for 9 to 11, then like 12. But basically the thing was go for $30. If you went for $30, you broke even. So When you made a buck, you paid some exchange fees. Basically, in essence, you broke even on the trade. So flat trade, and that's with that big spike that was not expected earlier in the day there. And what happened on that volume spike? Well, we got a spike down. We got our confirmation. Don't break the high. Again, if you did take the trade, still profitable, but that's an aggressive strategy. What about over 10 minutes here, 5 to 10? So we got 1, 2 right there. And then there's our buy. That is a confirmed buy. And so that right there would have also expired in the money. And then I'm just going through and just checking out these spike trackers while we pull stuff up. And then we go a little bit later in the evening, we get another spike right there. Does break the low. There's a short. Little oscillation. Would have made you nervous, definitely. But did expire in the money. And let's see here. And then taking it on into this afternoon here. Spikes down, spikes up, does break high. Okay, we got it long on the 5. The 10, again, aggressive. Let's try to get in there. I mean, that's really small movement. 10 minutes. So 1, 2, boom. Expired in the money. You probably or you're on the current hour, so you don't know yet. 15-minute, you definitely have to be in the current hour because the entry would have to be over here. Again, that would be an aggressive entry. So the 5-minute entry, that was the conservative method, already expired and is profitable. The 10 and 15 are 10 you may have got in on. But the 15 definitely, again, aggressive entry would be basically pending right now. So another nice day on the spike tracker. Very simple spike strategy. It's looking at expected volume, actual volume, and can work on underlying markets. More of a Nadex focus. The way I've made the strategy, because it's really focusing on that. Either it's going to reverse or you're going to get premium collection. And then, there's other things that go with it. You can use things like the whole magnet idea as well for the out-of-the-money trades especially. That's what we did yesterday. We were looking at magnets, and you can do magnets with out-of-the-monies. You can do spikes with out-of-the-monies. An example on that would be, so like right here you get a volume spike. It turns around. These don't win as often. They just make a lot more when they are profitable. But it's like right here when you bought the in-the-money for the current hour, you may go, it's going to come back to that spike low. And so for the next hour, you go and you target that. And, for like $10, and you make a nice profit on the trade. This one pops up. You're looking for a reversal. You're looking for it to pull back. It never really pulled back for enough for you to get out of the money. And then over here, spike down. So we actually would expect sometime, probably in the next hour, would not be surprised to see it come back and hit this low. So once you take that profit on that 15-minute one, if you're in it, definitely take that profit off and expect Aussie dollar probably by end of hour, if not next hour, to come back down to 94.32. All right, stay there. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. All right, so that wraps up the Aussie dollar trade for us. Like I said, also the previous night we did have the interest rate, so let's go back and just take a quick sneak peek at that one real quick. And got some decent movement on it. Let's see what kind of movement did we get. If we were looking at a, what would that have been, a 7 to 11 trade? So 1900 here, on down to 23. And right there, about 30 pips. We're looking at, about 35 pips or so, maybe more than that yesterday. Let me see what I have on the chart and on the interest rate. Oh, it's a 1230 to 730, so I got that wrong completely. Okay, I gotta check something out. Seems like some of the stuff's moving differently. But anyways, still would have worked out fine. We're looking at an 11 o'clock entry to a 7 a.m. entry. So bring this over to 2300, take it on to 7 a.m. I got non-event, 3 pips, so max profit on that trade. All right, so that brings us into, we got, the ISM. No, we had that yesterday. We'll go into the, let's go to the look at the NFP from today, the ADP NFP. And you got the euro dollar. And once we get that up, then get a sneak peek on that one. All right, so on the ADP NFP report, we had a movement expectation of about 30 pips on the euro dollar. And that was looking at an 8 a.m. entry for a 10 a.m. expiration. Let's see how that worked out. Look at that volume spike, man. It's telling you of the reversal coming. That is awesome. Anyway, so 8 a.m. and then reverse back the other way. Like perfect. I told you the sell and then the buy. 8 to 10. We have a difference. Got to stop hitting the wrong one there. Difference of 17 pips on the day for that report. And we were looking for a $35 minimum profit. So excellent. Stayed right within expectations on range. As far as a high to low, we got a low marker of 31 pips. Again, maybe you're not a Nadex trader. Maybe you are a Nadex trader. Maybe you're not a news trader. But the simple fact is, if you had that expectation of approximately 30 pips of movement, 35 pips of movement, and the market moved down that far, you should have an expectation to be done with going short, expecting a long trade, expecting at least the market to go flat at the very least. And so, I mean, just even as a directional or a scalp trader, that alone should have been a great clue for you. Hey, when it moved down 30 pips, you're done. Okay? And that's why I give you the expectations in advance. But it drops down, we get a volume spike. That volume spike obviously, works out well. It's profitable on an in-the-money trade. Even more positivity on that volume spike because we did move 30 pips. So that's another confirmation level on it for you. Also, the expectation is that it'll basically move, between 7 and 3 o'clock. It'll move less than 35 pips. We've already moved the 30 or so pips. What does that tell you? That tells you butterfly 10 a.m., butterfly 11 a.m., butterfly 12 p.m., butterfly 1 p.m., butterfly 2 p.m., butterfly 3 p.m., butterfly 4 p.m., butterfly 5 p.m. Okay? Tells you butterfly it all day. And it stayed right within the range. What's a butterfly? It's buying an in-the-money binary below and selling an in-the-money binary above. That one news trade gave you trades all day. All right? So, you got your short trade, you got your long spike trade, you got your news iron condor trade, you have your 3 o'clock iron condor trade, and then you have all these butterfly trades. So there's like 1, 2, 3, 4, 5, 6, 7, and then the 2 iron condors, 8, 9. That's 9 trades on one instrument, one chart, and very, very simple trades. Not highly active trades, very simple trades. So there is, even with nothing happening, there is plenty in the markets to take advantage of. And on a day like today, add in that close to close. Look at that really tight range, that butterfly net. And so that's basically what I call the close to close expectation. Or I'll go over here and I don't remember which one of our traders talked about that. And let me bring it up. I just got a note from one of my traders. It's pretty sweet. She's been doing well. It's like 1 or 2 losses in the last month. So that is sweet. Very good job. Way to go, Lori. And let's see here. She asked me a bunch of questions on the strategy she was doing. We worked on it a little bit, and she put the hard work in, and it's paying off. Anyway, so right there, look at that close to close. You can see, once we got outside that news hour, then we've been, even though we have broken outside of the close to close, we've came back inside of it every single hour, hence the butterfly net. And that's that little tighter range. You got that upper and lower range, that butterfly net. All right, so what else do we got on we got oil inventory. Let's pull that one up, and then we'll walk into tomorrow's expectations. So on oil, taking a look, we'll see. Oil inventory comes out usually the same time every week. Well, forget we got natural gas inventories coming out tomorrow. Let's see how oil acted based on the usual expectations. Oil is released at 10:30 oil inventories, and like I said, it came in a little worse than expected. Inventories dropped, and they dropped even more than they thought they would. Inventory did what you'd fundamentally think it would do. It shot up, but it did not stay up. Shot up, and then it pulled on back down. Okay, so it didn't stay with that fundamental all day. It just followed it for the temporary release. Sometimes it doesn't even do that. But we had a few things helping us out along the way. One, we had the expectation of movement, and that allows you to go in and plan out things like iron condor trades or butterfly trades. And check it out. I mean, we had an expectation range right here, and it was a little bit higher. It finished about 10 ticks higher, and pretty much where it spiked up to right after the news, pulled back, went right back up to it, and that met within the hour. So if you use that for a butterfly or a straddle, you had a proper expectation, and those expectations were hit on either side. Probably a neutral trade for you, maybe a profitable trade for you on a straddle or straddle, depending upon the pricing you could get. And then right after that, we got 5, 10, 15, and then we got a 5-minute right there. So basically we had aggressive entries on Spike Striker. So one right there, and we have the 15-minute one, which would be 1, 2, 3 right there. If you took the aggressive entries, obviously very profitable, and not really a bad idea considering we were down a deviation about, and we ran up about 1 deviation. Let's see, on the deviation marker, high to low, we got pretty close. Let's see, what do we get over here? We got to 0.885, 0.914, the highest level we got to on that deviation high to low. So at about 1 deviation with the volume spike, after meeting expectations on the last hour and then getting some strong volume on the way back down right there, that big volume marker right there where it tried to peak up and failed right past settlement. So you also got the settlement level. You got a lot of things pointing to go short. And worked out well. Got another volume spike over here telling you to go short on oil on current hour. Wish would have caught that one right at the beginning of the show. We could have done that. But right there, so spike, and then 2 bars after, go short. And there it was. So got about 18 minutes left on that trade. We could look at it and see if there's anything there still as far as premium. But my guess is that we're a bit past it. And jumping in a little bit late, we could have got more premium definitely earlier in the hour. So let's see what we got on that before we do the last part, wrapping up NFP. And all right, so grabbing oil over on the binary scanner. And let's see what we got, because we got some movement left, and we got a new hour. We're about on the end of this hour, though. All right, and so what I'm going to do is I'm going to go, and I'm just going to look at everything for oil, except for I don't need weeklies. So I'll look at intraday and daily, okay? And I'm looking to sell, not looking to buy. So I'm going to hit the sell button right there. And then I'll come down a little bit further. I'm going to choose, what contract it is that I want to trade. I want to trade oil, so I'm going to make sure that's the only one I have selected. It's the only one I need on here. So uncheck US Tech. I'm going to check crude oil, and we'll go down here, look at that, and now with crude oil on the list, we go, okay, what pricing is available for me? Maybe I'll move this to the left while I look at the chart on the right, and I can drag this a little bit over. We got a market at 104.33 right now. There's a 650 sell. Obviously, that's not worth it. We got a 104.30. That's pretty close at $55. 104.10. That is pushing below our expectations on the hour. So that's a pretty tough one as well. We're coming into the last 30 minutes here. In about 15 minutes, we'll start the last 30 minutes of oil, which could be a little bit crazy. We can see what we got on 230, but being at that expectation of high to low already, I'm not a big fan of just topping in on this one. That's too low. Let's go up a little higher. 104.50, 104. So yeah, we basically missed the trade. So there's nothing good there right now. We got like an at the money trade, or we have a way out of the money trade, which is beyond our expected movement, or we have an in the money trade, which is honestly just not enough payout to be worth doing the trade. So with the risk reward ratio on it. And with that being said, we'll move on to the next possible trade setup. Okay, so we didn't get to, oh man, we missed that one too. So many good opportunities, so little time. But they happen pretty much on the expiration of the hour. That's sort of hard to see because of the way everything's lining up. But yeah, right at the end, we got volume spikes on gold. to go short. It's like, well, that does us a lot of good. Gold expires at 130. Let's go ahead and check out the one other trade we can check out. Now, this is for tomorrow, just to get you expectations, okay? Let's go. Let's look at the natural gas movement expectations for the natural gas inventory report tomorrow. And we'll talk about Aussie dollar retail sales tonight as well. And I got to go through and reset all my instruments. I just have not done it. All right. So natural gas inventories, I'm making sure it's just still on the list. Yeah, it is. Okay, so 10:30 a.m. tomorrow. And let's look on over here at the expected range. Okay, and then we're looking for Thursday. We're looking for the hour that begins before, so the 10 to 11. We're going to look at 0.141, okay? So 0.141 is the expected high to low. And notice how before and after, I mean, it dropped. It's like 0.3. So, 0.03, I'm sorry. So 0.141 is your expected movement on the natural gas inventory report tomorrow. And we hit it pretty much perfectly on oil today. So no reason to think that won't be possible on natural gas tomorrow. So just make sure that you are aware of that. And let me see what else we can do. Let's see. May go over some trading hours as well. Here are the trading hours for the Nadex exchange. The exchange is going to observe regular business hours, obviously Monday, weekly contracts listed on this date. So all weekly contracts are settling on Thursday. If you go on the Nadex platform, you'll see they have a expiration of July 3rd instead of 4th. A little bit different. Let's see. Corn and soybeans will open at the regular times, but they're going to close early at 1 o'clock Eastern time. The Dow, basically the U.S. indices. So Dow, S&P, NASDAQ, Russell, we open the regular times. They're going to close at 1:15 Eastern time. On the daily contracts, intraday contracts will close at 2 o'clock, 3 o'clock, and 4 o'clock will not be listed. Okay, so they're going to shut down at 1:15. On the U.S. indices, 1 o'clock. On the ags, if we go on over the daily FTSE and DAX will open at the regular times. They're going to close at 1 o'clock. Intradays with a close time of 4 o'clock. 3 o'clock, 2 o'clock will not be listed because they're closing at 1. No currency contracts with an expiration date of July 4th will be listed. All other currency contracts will open and close at the regular times. Intraday currency contracts will close at 4 o'clock and 5 o'clock will not be listed. So I guess that means currencies are going to go till 3. And they'll have the jobless claims and non-farm payrolls will actually have their expiration of July 3rd instead of 4th because they're going to come out on a Thursday instead of a Friday. And the exchange will be closing at 3 o'clock Eastern time. It will be closed all day on Friday. All right, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Let's check out what all we got going on for tonight and see if we have anything on that we can take advantage of. So this evening we got, it's Wednesday night, we got retail sales and building approvals both coming out of the Aussie dollar. Let me see here, I'll pull that up on the screen for you. And let's see, last release there on June 1st. So let me go on over. And on that we're looking for, okay, so pretty simple. We're going to enter at 6 for an 11 o'clock expiration. And looking for a $30 profit or more, iron condor. So buying the lower spread, selling the upper spread, minimum profit $30, enter at 6 for 11 o'clock. And that is our play on the building approvals and retail sells. And again, that's going to come out tonight at 9:30 this evening. And let's see, that covers that trade for us. We also have, let's see, what else do we got on our list? We got Thursday, July 3rd. We're going to have services PMI. And out of Britain, we're going to have retail sales and minimum bid rate out of Europe. We got the employment change and jobless claims and unemployment rate. And we got the ISM non-manufacturing survey. Oh, my goodness. And we got the trade balance in the U.S. and Canada. Wow, so there is a lot. All right, so first let's knock out the British one, services PMI. That'll be the easiest one to get done. Scrolling over here. And the British Services PMI, there it is. Last release there, June 4th. Okay. And so on that one, the report we have, let's see if we got anything else on that. We may have decided that one wasn't. Let me check the one report before that. Okay. What we got on this one, wow, that's pretty wide. Let me check one more. I just want to make sure that I got the right stats up, but I think I do. Okay, so on the British Services PMI, it looks like we get a range between like about 30 and 50 pips. So I'm going to go ahead and put us on a either a $30 straddle, okay, entering at 11, and for a 7 a.m. expiration, okay, enter at 11 for a 7 p.m. for a 7 a.m. expiration, or a $50 iron condor. So you may even see if you can pull off both of these. It depends upon, what's lined up, which one is there, what pricing is there. That's enter at 11 for a 7 a.m. iron condor for $50 minimum profit, or enter at 11, 7 p.m. expiration for a $30 minimum straddle. And we'll see if either one is available, I guess, at 11 o'clock. That'll be for the 4:30 release of the Pound Services PMI. From there, what we got on the list is we got the retail sales in Europe and minimum bid rate. That's obviously going to be a very neutral report, which will be good for us. And so press release from 6 a.m. to 8 a.m. So the 6 a.m. entry, 8 a.m. expiration, pre-news conference, okay? But it'll actually happen during the release. We're looking for an iron butterfly of $30 to $50. So we're with minimum profit of $30. All right? So just don't worry about 30 to 50. Just minimum profit, $30, 6 a.m. to 8 a.m. And that'll take care of you on the iron condor. And then on the actual interest rate press conference, that's where we're going to look at straddles. Maximum $45 risk and minimum 50, or actually 60 pips profit. And I'll see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.